All right, welcome back to another episode of the Deduction Desk. I'm Joe, this is Sagar, and today we're going to be focusing on how to start a business the right way. Have a side hustle that you were thinking about, have a business venture that you were looking to build up. Where do you actually start? What are the key components to make sure that you structure this business properly? And then as it continues to grow, what are things that we could do to make sure that you're saving, obviously from a tax standpoint, but also from an organizational standpoint, right? How do I not get caught up in the minutia of, oh, well, I don't have separated accounts, or I didn't register it properly, or I'm not paying the proper taxes on it. So today we're going to focus a lot on what are the proper steps in starting a business.
Before day one, right? Like the things that should already be figured out, everything to know before you open the, turn the key and open the doors, or before you take that first 1099 into your name from some consulting gig you picked up. Everybody knows the way to actually make a long-term difference in your financial situation is to set up some sort of business, right?
Yeah.
Even if you're doing well for yourself, going on 1099 can be a massive difference in your personal tax situation.
Absolutely.
So, we all know what we're supposed to do. It's how do you get there?
Yeah.
And how do you actually progress on it?
And I think that most people think of, all right, starting a business, what do I need to do? I need a website. I need, the logo. I need to make sure that I have t-shirts. A cool name. I need to have a mug. Like all that stuff is stuff that's great. That's the creative side. That's the side that you guys should be having fun and focusing on. This is the piece that most people forget, right? The piece that they come to us in shambles, because if we had it set up correctly, it'd be a lot easier for you to run the business the way you need to run it, really.
Yeah, and I think it starts with picking the right entity, right? Like
it's,
am I going LLC? Am I going S Corp, right? Am I going C Corp? Am I going PC? I think those are all things that you need to, we have a video that we've done on it, which you should go check out, and it'll break down everything by detail. But I think the starting point on that is, how am I going to address it? Like, what entity am I going to pick? That's step one.
Well, and I think that where it starts is, from that standpoint, is what type of business is this, right? Is it going to be a side hustle? Is it a full-time business? Is it just real estate? Am I just doing online services? That's really going to help with the
what kind of taxes do I have to pay? Am I paying payroll taxes? Am I paying sales taxes? Am I 1099ing the people that work with me? These are all things that factor into that entity choice. Obviously talk to an accountant. If you're somebody who's trying to do everything on their own and figure things out on their own, know what you have to ask ChatGPT, because I'm 99% positive that's where everybody's going anyway for these questions. But, figure out what taxes you owe first, then figure out what your tax situation is like, how much income you make outside of this business. Is this going to be your only source of income? How much profit are you expecting to make realistically? And if you're married, what is your spouse's tax situation like? These are all three important things to consider and think about. We're not going to sit here and explain why all those things are important, because that's a whole different long-ranging subject and it goes super in-depth. But those are the three things you should be thinking about when you talk to your accountant and bringing it up, so that they can prompt you with, hey, maybe you should be a C Corp. Your spouse's income is over $2 million a year. Your income is going to be taxed at the highest tax bracket. You might want to be a C Corp and pay 21% tax.
Yeah.
Or maybe you're getting into something that's going to be a loss leader, and you may want to be an LLC to use those losses personally against your own income. Maybe you're trying to raise investor money, but you're trying to raise it 3 years from now. Maybe you want to be an LLC, and then when you convert to a C Corp, you do a safe investment and do a conversion that way. There's lots of different things that go into it, but step one is determining your actual entity.
Well, and I think when you sit down with your accountant, right, it's important to say, here's the business that I'm looking to start. Here's how much income I expect from it. Here's the revenue that I expect in the first couple of years. I do plan on hiring people. I don't plan on hiring people. Here's how much of my own capital I look to put into it. Here's at the end of the year where I plan on being. That's really going to help with, do we start off as a sole prop? Do we start up as an LLC? Do we start up as an S Corp? And to Sagar's point, we did a video a little bit back, so you can kind of search through our channel and see, but really sole proprietorship, single member, a multi-member LLC don't necessarily help from a tax perspective, right? LLCs are limited liability corporations. They're solely meant to cover you from a liability standpoint. Once you start to get into the S Corp, C Corp level, that's where you actually have significant revenue that you can pay yourself. Then you can help from a tax perspective. So those two things are very important in where you start, right?
And watch that video.
Right. And most of the time when you start, you're going to start off as a sole prop or a single member LLC. And then from there, as your business grows, you'll get guided, in that right direction. I think, the next part of it, how do we register with the state, right? And I'll let you kind of dive into that a little bit.
Yeah, so it depends on the state, right? For example, like where we are in Jersey, you can do it in less than an hour and have your business up and running. Whereas you just go a couple miles north of us into New York, and now you could potentially be waiting weeks because you have to put stuff in the newspaper. You can't just apply online. You have to actually send your application to someone who physically reviews it and stamps it and gives you a EIN or a state formation number. In our area, we've registered businesses in Texas. Those are a little bit easier. Florida requires a little more steps and work and sending stuff out physically. And so it just depends on where you are. But like I said, once you have the actual idea of what type of entity it's going to be, then you have to do the state registration. After that, if say you decide to go S Corp, you have to do these 2553 forms. The lawyers who are going to charge you like $3,000 to set up your entity and are going to use boilerplate, like stuff to do it, 9 times out of 10, they don't even know what a 2553 is. And then when you ask them to do it, they say, oh, that's your accountant's job. And then they you end up with a C Corp instead of an S Corp. So make sure you're working with someone who is going to do all of the steps of the registration and address that with them before you start and before you pay them. Hey, once I'm done, is there something that's going to be required from me? Get it in writing from whoever you're using, the attorney or the accountant. These are the things that are remaining for you to do from your side after we've set you up, so that it's not going to be what it always is that I've seen when something's registered incorrectly, a blame game where the professional is usually saying you missed something. Maybe you did, maybe they did tell you, maybe they didn't tell you. If you don't have it in writing, you don't really have a case to, see who's got to fix this issue for you. State registration first, ancillary registrations like 2553s. Next, federal EIN after that. Third is going to be drafting an operating agreement between yourself, if it's a single member LLC, or your partners, if it's any other type of entity. If you have outside investors, it's super important. In fact, you usually can't even open a bank account without an operating agreement. There's lots of great resources for getting an operating agreement. If it's complicated, I suggest talk to an attorney just so there's no questions in the future, especially if you have partners. And then the last thing is make sure your other registrations are done. The things we talked about just a few minutes ago. Your payroll registrations, your sales tax registrations, your alternative business registrations. If you're in California, your LA County registrations or San Francisco registrations, the city tax registrations. There's a million different things you need to checklist through. And that's why I'm saying before you start down that path, ask whoever you're working with for an exact breakdown of what you need to accomplish.
Yeah, even if you're doing it by yourself, right? Even if you're an individual company and you're thinking, this isn't going to be too complicated, obtaining an EIN number, registering with the state is going to be important. So this way, especially if it's going to be an LLC, you're taking the liability out of yourself when they're not paying your social security number, they're paying this EIN number. That's obviously very important.
And what's the question you get the most about people that want to set up a new LLC?
What? Does it make sense for me to apply in other states because maybe I'll save from a tax perspective? Yeah. Like if I set up an LLC in Delaware, is it going to save me money from taxes? No. Just because nobody lives in Wyoming doesn't mean that they're going to give you a tax write-off for writing your business through Wyoming.
In fact, you're probably breaking a bunch of laws because you should have registered in your state as well as Wyoming.
Yeah, most of you probably never even been to Wyoming. You're not writing yourself an LLC through Wyoming. Exactly. You never actually stepped foot in the state. And we've spoken also on previous videos about the importance of where the actual business is produced, right? Again, if all of your clients are in Wyoming and you're doing Zoom videos with people in Wyoming, then you should be registered with Wyoming, right? But if all of your clients are in New Jersey, all of your clients are in California, and majority of your revenue is driven from that state, that's where you're registered.
And that doesn't mean you can't have a headquarters in Wyoming.
Yeah, of course.
But that means you also need to register in the state you're actually conducting business in.
100%.
And whatever you were trying to avoid by moving the income to this other state is, still due here, especially if you're a resident of that state. Even more so if you're not a resident of that state and you're doing business in California and you're like, I don't like California's laws for taxes or their politics or whatever your thought process is behind that. And you say, I want to be registered instead in Delaware. Right? And because there's no corporate income tax there. That doesn't mean you can go and hire employees in California or open up a business in California or even take sales from customers in California without, in every case, almost every case, having to register in California.
Right. So let's dive into the next section. I mean, it sounds boring, right? But it's actually separating your money. And I think this is a key component. Number one, for you as an individual to track what your business is doing. But number two, when you get to the end of the year and you actually have to do the bookkeeping, the accounting, you're looking at what did I spend on the business? What did I make on the business? What came in? What went out? When you start mixing that with your own bank account, believe me, I've done it in the past. You have to go through each monthly statement and highlight what was business, what wasn't business, transfer that to another account. And then from an accounting standpoint, you have to show this stuff was my actual business, this stuff was actually personal. And that's where it gets very convoluted. So opening up a business account, opening up a business credit card, paying for things on the credit card, you're getting points for that stuff as well. And then paying it off through your business account with the revenue that you've made. Very important.
Yeah, and it also will make your accounting easier at the end of the year because you don't have to dig through a bunch of your personal bank accounts to see what was an expense and what wasn't an expense for work and what was a deposit from work and what was like just, your fantasy football dues or whatever it was that got transferred in. I mean, rule number one, also, you need to do this stuff so that if you do ever have an audit, it's not a nightmare for you.
Yeah.
That's reason 1A of why you need a separate bank account and a separate credit card. But beyond that, if you ask me to do your bookkeeping at the end of the year, it's going to be a hell of a lot cheaper if you're giving me bank statements and credit card statements specifically for that business that only have transactions for that account than me having to dig through your personal, and that it's just going to get expensive.
And again, to remind everyone, right, the IRS is going to step in and say, we don't believe you, prove that wrong.
We have that right now. We have that happening with a client right now.
Yeah.
And this is it was unfortunate for this person, but they had a child that had a very high medical expense in 2022. They got an audit from the IRS because it was hundreds of thousands of dollars of medical expenses.
Oh, wow.
The IRS said, show me your expenses. They sent a credit card statement that included personal expenses on it.
Yeah.
And the IRS said, we're not allowing $1 of your medical expenses.
Oh, wow.
So, I mean, obviously they're wrong
in
this case. And now we're, fighting it, and everybody obviously mixes these things together.
Yeah.
But this is what the
Prime
mentality
reason.
is.
Yeah.
That you will have to go to tax court if you have a mix of personal and business expenses. Like, it's almost always going to be the case where the person who's looking at it's going to say, I'm not looking at this because there's personal expenses in here.
Right.
So keep it separated so you don't even have that issue and avoiding yourself a bunch of extra costs because of something as silly as that.
Yeah, and time, right? Think about the hiccup it takes when you now have to put things down for your business, which was going well. Now you're going to tax court. Now you have to write up logs of every place you've been and when you've been there. And you have to submit exactly what you were doing day to day for 365 days.
And it wouldn't have helped this person in this case, but it could help you by having it separated, because then at least you can get it done in mediation or before when the auditor is looking at it, you can explain your case without it having to get kicked up automatically almost.
Right. Yeah. So now let's dive into the actual accounting side of it and bookkeeping, right? So let's talk a little bit about, making sure we're reconciling monthly, right?
Yeah.
The choosing the accounting method is important.
If you're somebody who is able to figure out things pretty quickly and intuitively and you're self-sufficient, I think QuickBooks is a good tool. We have to train our own accountants on using QuickBooks because I personally think QuickBooks kind of sucks. It's just the standard, right? It's not very user-friendly. If you link things incorrectly with the online version, you end up with a bunch of expenses that are miscategorized. It's actually more work to then go and delink things and redo it. If you've had these issues before, you're probably nodding your head saying, I hate QuickBooks too. We actually do everything manually for that reason, that it's just easier, especially if you're not keeping up with it on a daily basis, which is really what you would have to do. That being said, there are other options out there. There's Xero, which is I think a little more popular in Europe. Wave is out there. There's an infinite number of different accounting softwares that you can use. There's in-house softwares. If you have a business that has a POS system, you can sometimes even link an accounting system into there. But to be honest with you, I have plenty of people that use Google Docs.
Just do it manually, right? Excel, whatever.
Excel and Google Docs, and they just understand what you're supposed to do on a monthly basis. And the Excel sheets are fine. It makes sense. It's usable. It's real records. It can be turned into a P&L and a balance sheet, but you have to do one thing. You have to do monthly reconciliations. The reason why QuickBooks is so popular is it forces you to do it. If you're doing your reconciliations on your own.
So what is reconciliation?
So basically what it is you have, let's say January, you do it for the whole calendar year, right? January 1st, you enter your opening bank balance. You then add whatever your deposits are. Every single deposit, whether it's a personal deposit, a refund, interest like a $5 interest check, whatever it is, everything gets entered as a deposit, and then you categorize it as a sale, or if it was your own money you're putting in, whatever the reasoning behind the deposit was. Then you enter every expense that comes out of the bank. Whether it's you taking money for yourself and putting it as a personal expense, whether it's you buying equipment, paying your rent, or even something as, personal expense like buying a piece of clothing for yourself that's completely unrelated to your business and should be a personal expense. Every transaction, every income, every expense gets entered. And as a result, the end balance, the number that you should have after you add everything up, should equal what your bank statement says as the ending balance.
Yeah.
Right?
If you think about it from common sense standpoint, the IRS wants to know, what did your bank account look like January 1? And then all of the revenue, all of the sales, all the deposits, all the expenses at the end of the year should even out, and it should be exactly what you expected it to be. And if it's off, they need to know why. Where did $10,000 go? If it didn't come in here, where did it come from? How did we deposit it? How did we withdraw it?
When they look at your Excel sheet that you're using, let's just assume it's an Excel sheet, they want to look at the January statement and see that the opening balance matches what the bank statement says.
Right.
Then they want to look at the December 31st statement from the bank, and they want to make sure that ending balance equals what is in your Excel sheet as the ending balance in your bank account.
Right.
Then it's just a matter of categorizing things. This was for cell phones. This was whatever, right? Those categories go in. We add up the categories at the end of the year. So there's a total for cell phones, a total for sales, a total for discounts, total for payroll. That's all a reconciliation is. If you can have your beginning and ending match to your bank statement, you have books that you can use to file your tax return. And you saved yourself probably like $5,000 in bookkeeping.
Just doing it yourself, right?
Yeah.
So that's something that's important, right? Moving on to the next part, it's understanding the taxes that you're gonna have to owe. And I think this part's important because especially when you run your own business, it's not like maybe what you may have been used to in the past when you get a W-2 and the taxes come out automatically. You're getting raw gross income. So when I'm getting that income, how much do I owe in federal income tax? How much am I gonna owe in state? How much am I gonna owe in self-employment tax, depending on how I'm structured, right? We talked about LLC to S Corp, different video, but you'll learn that as your business continues to grow. If I owe payroll tax and I'm an S Corp, what am I gonna have to pay?
Yep.
All of those things are things that are important for you to keep in the back of your mind. And even if it's a set percentage that you say, every time I have revenue, I'm gonna put 25% aside or 35% aside, being safer. At the end of the year, I'm gonna have a bucket of money that I know I can pay the taxes on. And worst case scenario, there's more money in there than I needed and I can just pull that back to pay myself.
Yeah.
Nothing is worse than getting to April of the following year and your accountant says you owe $25,000 and you have $6,000 in your bank accounts, right? So those things are crucial when it comes to understanding how I'm going to pay taxes and what the tax amount may be.
And we're not going to explain to you in 15 minutes a whole video what your taxes are that you owe on that money you're making, right? It's an individual person by person thing. You should be talking to your accountant for that and you should have an idea. But if you don't have an accountant and you started this and you have no idea what you're doing, keep about 35% on the side of what is like left after your expenses. So when you do that monthly reconciliation, that number that you have, subtract out any personal expenses, add that back to your profit number, and that profit number, you want to keep 35% of that for the end of the year.
And again, it's almost like a forced savings. You saved into it, maybe you didn't need that much, and now you have an extra nugget at the end of the year.
Yep.
Licenses, permits, insurance. Obviously, each business is going to depend. Do you need a license in order to perform the business? What type of business is it? Do we need insurance? Do you need liability? Do you need E&O? Those things are things that are going to be important also. And they're all factors into your actual business plan, right?
Yeah.
If I'm putting a business plan together, what professional licenses do I need in order to do that? You can't just say, oh, I'm going to start trading accounts for people and they're going to give me money and I'm going to invest and take a fee off of it. You need licenses to do that. You need E&O insurance to do that. You need a broker dealer to do that. So all of those things are things
Workman's comp.
Right. If you don't have the research or if you haven't done the research on it, use ChatGPT, use your accountant, but find out what is specifically needed in order for me to set this up to cover myself. Because some of those insurances are required.
Yeah, it's legally required. You cannot operate businesses like an S Corp without workman's comp in almost every state. You need E&O insurance if you're any sort of professional that's doing a professional, job for anyone. There's liability insurances. There's all kinds of things that you need to factor into your business plan as well before you even start the business. And these are things that you should be thinking of while coming up with your planning. That kind of leads into the next thing we were going to talk about, which is making sure you're properly accounting for your payroll. A lot of people say, hey, I'm going to hire this person and I'm going to pay them like, $70K a year. Okay, well, did you factor in your payroll taxes? Did you factor in the workman's comp that you have to pick up for them? Did you factor in the health insurance you may have to pay for them? The 401k match you may have to offer them?
Yeah.
Have you factored in the overtime you may need to pay for them? So these are all things that you may not have thought about. And now that 70,000, all of a sudden, it's actually like 85,000 that might be coming out of your business. So have an idea and then add a buffer and then make sure you're consulting with someone so that your projections are accurate.
Yeah, and know the determination between someone you're contracting, right? And we've talked about this in other videos as well. Someone you're contracting just compared to someone who's actually going to be an employee and working for you. Compliance is really next, right? So, we're starting a business. Step one is how do I stay in compliance? Annual state filings, obviously my business tax returns. If I have 1099s, in that example, I hired a contractor to do one specific job for me. We use the example of building a website. Maybe you don't have time to build a website, but you hire someone else to do that. You 1099 them.
I would say I could give you dates, like general dates on when you should be doing these things, right? Yeah. Annual state filings, those are your annual reports. That's outside of your tax return filing. That's to keep your business in good standing. Those are, it can vary by state, sometimes as low as 500, sometimes as high as 800, depending on the type of entity. Those are usually around March. You start seeing those. You're going to have your business tax returns. Those are always due March 15th. Okay, not April 15th, March 15th. So that means that you should be getting stuff to your accountant by February so that they can get ready for the March 15th filing. 1099s that you would issue to contractors, those are due January 31st. So you want to have everything out and sent to the government and your contractors by the 31st. Sales tax filings, those are typically the 20th of the following month or quarter, depending on the type of filer you are. Bookkeeping reviews, those are kind of like optional. That's like depending on how you're working with your CPA, but those are typically also somewhere between the 15th and the 25th of the following month. Having this checklist of things should be thought about ahead of time. Make sure that's on your calendar. Unfortunately, when you're a business owner, you don't always get to just take off a month to go travel. Even when you are doing those things, there's still things you have to check in on and make sure are getting done. The good thing is all those things that I talked about, we do take care of for you. Yeah. So if you ever need help with that stuff, let us know.
Yeah. So let's do a quick recap, right? So the first thing is clarifying what you're actually starting. What type of business is it? How are we going to be setting it up? How big is it going to be? How small is it going to be, right? The next step is what type of entity should be setting up? Do I need limited liability in an LLC, or am I setting up a sole proprietorship? How do I register the business, or making sure that you are registering the business, whether it's federally or whether it's state? Separating your money, your personal money from your business money should be the number one thing you start with. Business account, personal account, the accounting and the bookkeeping, right? Sit down with a professional, and obviously more than likely by this step you already have to talk about your entity, but sit down and make sure the bookkeeping and the accounting is done properly. Next step is making sure you're paying the taxes. How much tax am I going to pay? What taxes am I going to be responsible for? How much should I set aside? Exactly, to Sagar's point. When is it due? What are the dates that are most important for me to have that? Licenses, permits, insurance, compliance, and then obviously making sure that your payroll and your contractors, whoever it is that you're going to be hiring to help you become successful in your business, all of that stuff is taken care of ahead of time. Guys, thanks for joining. Hopefully this was helpful. We look forward to continuing to help some of you business owners who are looking to start their own business excel rather efficiently, and then also better from a tax and an investment standpoint. And we look forward to seeing you guys in the next video. Thank you.